Thursday, July 13th, market analysis standard, like almost 10 o'clock California time, and we have another very strong day. But watch out, please, we're overbought. When we get in these conditions, it can last a few days sometimes, and you can get some further extension, more rally, but it becomes extremely dangerous to be buying new long positions at these levels. I'm looking for sell signals. I'm looking for reasons to expect a couple of one or two little gaps to close slightly lower, only from a few days ago, in both the Qs and the S&P 500. So let's take a close look. At the spider, we see that the market has turned yellow on the daily data chart here, the vertical bar chart. That means we're overbought at the high of the day or even lower than that. So we gapped up this morning, but the gap was closed very quickly on a little bit of a dip. But yesterday, the market had and still has a breakaway gap, you could call it, even though that's the least likely gap to be closed. It's usually closed. So there's common gaps and there's exhaustion gaps and breakaway gaps. So this does not look like it's in a place of an exhaustion, except we got overbought today, the day after the breakout. I think we're about to come back down very soon to 443. We'll do just fine. And there's a chance it could dribble off even more, maybe down to 438. But I don't expect it to break below 437. Period. So in that zone, I'm expecting from the first gap closure, 443, probably the closest to the downside dip we're going to have soon. Depends upon how much higher we might be able to go in the interim. We are approaching, by the way, a very important price level. And you can see that way back on April 21st, a little over a year ago, there was a significant rally high, and we're very close to that level. And it's at about 450. And again, we're 48 and a half. A couple of point and a half more is no big deal. We're up 2.5 right now. So above that, there's something much, much, much more significant in terms of the likelihood that the market's going to stop rallying. And if we go straight there in the next couple of days up to 454 or higher, another extra 4 more points from 50, that's going to be even more overbought and a more significant resistance area and a much higher likelihood the market will turn back down. But it could turn back down any old time. I just wouldn't run after it at this particular point. The last time we came down, we tested a support area that was very significant, bounced right off of it. Unfortunately, I didn't get my gap closed like I was looking for at 423. I only came down about halfway, and it was from an overbought condition. So here we are again, overbought, and a gap to close below the market. So enough said, but I'm very bullish intermediate to long term, period. Have been basically since October 13th, which was an ER buy signal at the low of the move. And we also had the almost the very beginning of the bear market, a bearish engulfing, which was November 22nd, but it made a higher high and then finally collapsed. Another great one, April 5th of 22. Some whopping profound sell signals on the way down early in the 2022 bear market. And finally, we picked the low day, October 13th. Now, and I got something to show you on bonds. It's taken off. Talked about it a few days before it did it. It's working fantastically. Hang on a moment. Let's look at the DIA. Daily data. It couldn't and didn't maintain prices in new high ground, and that was new highs for a significant number of months since December 13th last year, a half a year. So 6 months. It didn't stay there. That was yesterday's rally high. And I keep mentioning anytime markets pop into new high or new low ground and all of a sudden flip-flop back into the same range that they were trading in before is not a breakout. It's a false breakout typically. And this is exactly what this looks like so far. So today's an inside trading range, no higher, no lower, and it's up a little bit, 42 cents, not even half a point. All the markets have to do is burp a little bit, and this is going to be lower on the day. Then you're running a risk real quick of being lower than yesterday's low and starting to slip off a little bit more. No particular major gaps here, but still looking a little toppy at the moment. Longer term, very bullish. No ifs, ands, or buts about it in my mind. It's just that the Dow Jones were lagging way behind from the bull market that was led by the QQQs. Here we go. We have two gaps. Today we gapped up and the gap is still there. And yesterday it gapped up. That's the little breakaway gap to the upside. It did make new highs and maintain them, and reinforcing that today. But again, it's overbought. Danger. So coming back down to a 368 and 3/4 would close the second gap 2 days ago. And that's exactly what I expect. It is possible it'll dribble back down off to 363.5, but I'm thinking that's going to hold again from 68 to 63, basically. And no way do I expect it to break down below 357 at this particular point. I know there's that old gap way back here on April 24, 25. And I thought that was going to be closed on this break a couple of weeks ago. It didn't do it. And this is typical of a bull market, getting strong, staying strong, not necessarily running up a hell of a lot. If you do that, which is what we're doing right now, you get overbought and we have problems for the moment. Hey, it's going to create a buying opportunity. Also, on the 2000 Russell, there's a gap 2 days ago, and we have gotten overbought here. Now, a different story. When you come down and close a gap on the 2000, you're also right almost at the beginning of a huge support area that lasted its support and resistance, that stopped market rallies off and on for way over a year. Now that we're above it convincingly for a couple of days, coming back to it should be support and close the gap at the same time. And obviously, I would expect it to turn around and start to rally back up. It might dribble off a little more. That's it for stock indexes. And now for futures. And the first thing I want to show you, and I have been every day now for about a week plus, I think, there's a cycle in the bond market. It's 88 days from low to low. Start with 4 days ago, go backward 88 trading days. You'll find exactly the date of March 2nd of 23. Go back another 88 days, you're going to find October 24 of 22. And if you go back, hang on, another 88 days, you're going to find a bullish engulfing ER buy signal on the date of June 16th of 22. And if you go back another 88 days, you're going to find a little earlier, a couple of days earlier than that, a low of profound magnitude. I can't believe how accurate this cycle has been lately, but you know, past performance is not indicative of future results, and hypothetical returns have some inherent limitations. But I'm telling you about this real time. We are up right now 1 and 5/32, and it's been climbing steadily all morning, and that basically is for 2 days now. Cycle low, perfectly on time, in a support area, in oversold condition. Hey, and it turned around. Okay, let's go other futures. We're going to start with the E-mini. Of course, it's the same thing as the spider, but it's overbought. Be careful. Next is the bond chart. I'm sorry, out of sequence at the moment. Natural gas. We are starting to see a new low close, possibly today, and that is since this red sell signal, but only ER1 caught some money out of this. We were only 1 day late, unfortunately, trying to get short, so that would have worked, but I can't claim it. So next chart, we have a brand new buy signal in coffee today. We had a buy signal on the 6th of July. It failed, unfortunately, smack at the bottom of the break. Hey, that happens. A brand new buy signal within a few days of another one is beginning to cluster. This one looks more encouraging, a cheaper price to go long at Volatility is flattening out. I think this one's going to do the job. The last one would have lost a little bit. Let's see if we can't make it back and see what happens with this bullish engulfing coffee new buy signal. Next is sugar. I think I'm going backwards here. I expect to see this rally fizzle. It's up against a previous trend line, and I'm looking for a turn back down again, challenge the lows of a couple of weeks ago, and possibly get into that major blue zone there that's starting major support at around 20 and a half-ish. Next chart is corn. We had a buy signal a couple of days ago. It was a day trade loss the next day. Not good, but not a large loss. Now it's trying to come back up. Is it really trying to bottom out overall? I can't say yet. Next chart. Soybeans. Profound potential, huge. Double top formation over a year's time frame may be developing. It's very early in the stage, but this is how they start. You get a high about the same as a previous high, not typically over a full, huge year. Double tops are typically a week, couple of weeks in size, maybe a few months. Again, this is fairly rare. Makes me a little skeptical. So far, so good, including the fact that yesterday we had a bearish engulfing ER sell signal. Excuse me. And today we opened around unchanged, had a rally. We got short at the red dot. We have a little loss at the moment, 15 cents it looks like. Our initial stop is 1378, give or take a few ticks, above the high of bearish engulfing yesterday. And we'll see if this works. Day's not closed yet. So it could easily slip right back down to be a profit on the close. Excuse me, although it doesn't look like that. So we'll see what the next few days bring. But this is horribly bearish on a long-term basis. And I have to mention, if it works, I get to tell you months from now that we have a sell signal on the top of the soybean market, or almost exact high, if it does what I hope it's going to do. Next chart, bond futures. We saw the cycle EC forecaster displayed on the cycle chart. These vertical green lines are another version of it with TradeStation, and it's a clone, so to speak. Mine does a heck of a lot more in a lot different ways, but this points out and a very, very strong market at the moment. So what can I say? It's working. I just am sorry I didn't get a green bullish engulfing buy signal. Next chart is the 10-year notes. Bottomed out on time with the 88-day cycle and is very, very strong. And by the way, we're getting easily so far right through the first significant resistance areas. Wow, a really good takeoff here. Next, crude oil. Got overbought today. Now approximately unchanged, just up a little bit. If crude oil starts to slip, especially closing lower, this could be the day that it turns down. It is in resistance and it's now overbought. I'm looking for a sell signal, beginning of a down move any moment now. Same commentary for the heating oil, exactly. On top of that, the heating oil bumped against the major bear trend line and now has a overbought condition and could have an outside down day very soon. Dropping low and last, close to yesterday's low. Oh, heck yes, it hasn't got too far to go and it'll turn red. That would be great. We did catch the last high just like that right here. And then 2 days later, 3 days later, we had another sell signal and gee, 1 day down, 1 day up, 2 down, 3 down, 4 down, 5 down. Out of 5 out of 6 days, we're down after those sell signals. Next chart. Rallying into resistance, getting very close to overbought. I'm looking for a turn down in gold very quickly here. Hopefully I'll get a, bearish engulfing. Next, overbought period, very strong rally. Broke through a little resistance. Let's see if it can close above that though. If you don't close above 24.82, that could be a sign that it could be, a false breakout of sorts. I'm thinking that a rally high is very, very close at hand here on silver. Next, Platinum is almost the exact same commentary. We don't have an overbought condition, but we're super close. And it's not very far away from a relatively decent resistance area. And coming up underneath an old bull trend line, you sometimes bump up against those and then drop right back down. Next, possible resistance area on this rally, natural copper, and almost overbought. I think it's about to turn back down very soon. Next, a little trading range in soybean oil, kind of like a very small pennant in the last week and a half. So they're usually continuation formations, but I'm thinking this major resistance area is going to stop it, and I think we're going to break out to the downside. A couple of support areas just below the market, but this looks like a longer-term bear trend has started, and this could very well be a very important turning price range until we see it drop below 40. Next, soybean meal, same kind of commentary. I'm looking for below 360 relatively soon. May take another couple, 3, 4, 5 weeks or something, but yeah, down. Next, wheat, pretty much the same commentary. We got a sell signal in wheat market that I talked about almost every day since then. I don't like where this occurred. The code did have a legitimate red bearish engulfing, but I'm probably going to change that in the future. One way or the other, it's working. But I'm not going to claim we actually took the trade because I don't like being provided a sell signal when the RSI is way low like this already. Next chart is live cattle, caught the high and a little bit on the way down. Very good trade out. Now it's overbought again and again. So I'm looking for a little bit more of a correction, but this is just plain old everyday bullish, no pun intended, live cattle. Maybe it will test 170, but probably somewhat above that on this dip. I'm looking for a buy signal. Next chart is lean hogs. Sell signal didn't work. We actually had a small day trade loss 2 days ago. Now, is this going to turn into a double top of some sort? I can't tell. I think this is overall topping out. Look at the longer term situation. We're right up against a lot of resistance. The market probably is going to stop rallying in this ballpark range it's been in now for a week and a half and start to make lows lower than the last sell signal, which was only a few days ago, and it didn't work. But remember, they cluster, so we might even get another one here soon. That is interesting. Next chart, OJ, the head and shoulder top that I've been telling you about now for over a week, still is a legitimate potential. In fact, it's becoming a little bit more interesting. We had about 4 days here of sideways twiddling around to make the first shoulder high, which was X number of days from the highest high, and approximately X number of days from that highest high to just the last 4 or 5 days of fiddling around. You've got another trading range around the same levels price-wise as the first shoulder. That's how shoulders are made. Slightly upward slanted neckline, totally normal. Let's see what happens here. You start making higher highs, you're going to start to ruin the pattern maybe. You start to come down and make new lows on a closing basis for the last few days, you're going to have some downside momentum start to build, I think. And that could be the finish of the pattern. And then you get your breakout on the neckline, and then we'll look at how much down it's going to go. And I can tell you right now, it's in the ballpark of, a little below 200 probably. Next chart, cocoa. I'm looking for a retracement. It started, got overbought. Maybe the trend line will hold. Watch for that. I doubt that we're going to be oversold, but maybe close if we can come down the next day or two to that trend line. It's a bull market. I don't see any major top here yet. I do notice the divergence, though. Highest high in the RSI was back in this time frame, while new prices, new highs in price occurred. The indicator did not make a new high, so that's divergence, something to be mindful of. Boring cotton, sorry about that. Just a big sideways trading range. Got to wait for a major breakout here. Next is new high ground for the E-mini. We started out on the E-mini. You guys have a great day. Talk to you tomorrow. TGIF tomorrow.